Welcome back to the Supply and Demand Strategy course. If you're new here, this series walks you through a complete proven technical framework designed to help you master market timing. Whether you're day trading or swing trading, and whether you trade Forex, futures, stocks or CFDs. When applied correctly, this approach is one of the most effective ways to trade successfully. Today's episode is a special one because we are now deep into step 3, market timing. And this is where everything you've learned so far finally connects on the charts. I've spent more than 13 years perfecting this strategy, and this course is where I share it step by step, pure actionable education. We've already built up over 18 detailed lessons. So if this is your first time watching, make sure to start from the beginning of the supply and demand playlist. Watching in order and practicing each concept will help you get the most out of the process. If you've been following this series, you already know how powerful our 3-step process is. First, we build context, then we define our zones, and finally, we time the market with precision. And today, I'm going to show you exactly how professionals refine that timing using originality and flip zones, 2 zone qualifiers that can dramatically increase your probability of success. Before we jump into the charts, remember this. In trading, the real cost isn't education. It's the lack of structure. One wrong assumption, one wrong system, and the market teaches the lesson for you. That's exactly why we are launching something new. We've created a limited time educational opportunity for traders who want to master the strategy properly. I'll reveal everything later in the video, so make sure you watch until the end. Alright. Let's refine your market timing with originality and flip zones. In our last lesson, we broke down freshness, looking to the right of the zone to see whether price has tested it. Today, we flip perspectives. You're going to learn how to look to the left of a zone to evaluate its originality, a concept that's absolutely essential for understanding market structure. We'll also explore flip zones, where one side of the market completely overwhelms the other. These 2 qualifiers can dramatically increase your probability on the lower time frame. Okay, so I've prepared 2 slides to break down the theory behind originality and flip zones. Right after that, we'll jump straight into the charts for an extended practical application session so you can see exactly how both concepts work in real market conditions. Let's start by recapping freshness. A zone is fresh when price has not tested it yet. To determine this, we always look to the right of the zone. If price has never returned into the zone, whether we use the preferred or wider version, it's considered fresh. A zone becomes violated the moment price moves through it. Now, when we talk about originality, we look to the left of the zone. A zone is original if it was not created as a reaction to another zone on its left. A zone is non-original if it was created as a reaction to a previous zone. This distinction matters, and you'll see exactly why when we apply it live on the charts in just a moment. Next, let's define flip zones. And again, for these, we look to the left. A demand flip zone forms when a fresh demand zone is created inside a previous area of supply. In other words, demand overtook supply and established a new demand zone. A supply flip zone forms when a fresh supply zone is created inside a previous area of demand. Here, supply overpowered demand and created a new supply zone. Flip zones are generally stronger because one side has clearly taken control by breaking the opposing zone and replacing it with its own structure. If any of this feels abstract right now, don't worry. Once we move into the live chart examples, everything will click quickly. So let's jump straight into the charts. All right, so to demonstrate quickly originality and flip zones, we are here on TradingView looking at the daily chart of the Swiss franc futures. The Swiss franc futures, by the way, just FYI, is the inverse pair, so to speak, of the USD Swiss franc in the spot market. And then we're going to look at the euro dollar, the futures market as well. All right, I'm also using the replay function quickly to really showcase originality. And we're going to look at originality and flip zones without any further context. We're not going through the whole 9-yard location, direction, and lower time frame zoning process. We are really looking at these two particular rules or concepts by itself. And let's assume here now on the daily chart, I want to find a demand zone. And the first demand zone you see here, and actually it's a quite nice demand zone, just without using any further context. You see here you have a drop, a base, a rally, followed by a rally, base, rally. And all rules are met. And it's even a level on top of level, level on top of level. We cover in one of the further sessions. But it's actually from a level structure point of view, it's a really strong level. I would say even 9 out of 10, almost a 10 out of 10, just from a level structure point of view. So it's a really good zone. So let's quickly draw this zone, right? If here, distal, here we draw the wider version of the zones. Here we have the drop base rally, and here we have the rally base rally, and we are also going to use the yellow box to really visualize the zones itself. All right. Now, here we have the zone. So from a level structure, as I said, very nice zone. So some people maybe want to trade this zone or wanted to trade this zone because I'm using the replay function. This is playing out as we speak. Before we continue with our practical application, let me pause the charts for a moment because what you just saw links directly to something important. I mentioned earlier that people say real education is expensive, but in trading, it's actually the wrong education or no education that ultimately becomes the most expensive mistake you can make. And that's exactly why, for the first time ever, we are doing something special this week. Over the past few months, our community has grown massively. More traders than ever have been learning the strategy, practicing supply and demand, and shifting away from guessing and towards real structure. And the results speak for themselves. Let's take a moment for the recent successes. Just recently, one of our students generated $42,495 following the exact system you're learning right now by applying a clean, rule-based framework and sticking to the process. And it's not just him. I meet students all the time, successful traders who visit us here at the headquarters, who tell me how this structure completely changed their trading journey. How they went from guessing to finally becoming confident, consistent, and profitable. We have seen traders make $23,000, $8,000, $15,000, and $9,000 in recent months. All documented and all from traders who decided to commit to structure, life guidance, and a real trading plan with support from our massive community. Some big results, some moderate results, but all showing what's possible when you follow the process properly. And here's the important part. These outcomes depend on discipline, consistency, and learning the system the right way. But when you do that, these results become achievable. And the next trader who does this properly could be you. Which brings me to why I'm interrupting the video. For the first time ever, we're opening a Black Friday offer for traders who want to take this strategy seriously and learn it with full support. Normally the Blueprint program is priced at $497, but one of our goals at Online Trading Campus has always been to make professional trading education more accessible without lowering the standard or compromising on what truly matters. And for this Black Friday weekend only, we are doing exactly that. To support more beginners, more developing traders, and more people who want to learn this the right way. You can now join the Blueprint program for only $297. This is not a discount to make things cheap. This is a limited time access opportunity we are offering this weekend only to help more traders step into real education instead of spending months or years guessing. When you use the direct checkout link below, you get immediate lifetime access to the entire blueprint, which includes a private welcome call, access to the blueprint course video program suitable from beginner to advanced traders, access to live trading sessions multiple times daily, access to all our proprietary indicators, an invitation to an instant funded campus fund account of up to $360,000, and a welcome into the community of 4,000 plus like-minded traders. With this offer, you will receive direct checkout access, which means no application and no waiting on what you want to achieve. Everything you've seen me break down in this video and my supply and demand series, everything our team trades live on the floor, everything our students use to build consistency is inside the Blueprint program. And for those who want deeper support, we are also opening a very limited number of one-to-one mentoring seats. If you want personal guidance, direct accountability, and tailored support from our team, you can apply using the second link below. I will review every application personally, and if you're a good fit, we will reach out to you directly. These private mentoring seats are extremely limited due to capacity and availability. And once the seats have been filled, or when we reach Sunday midnight, whichever comes first, the link will be closed. So if one-to-one mentoring is something you have been considering, make sure you don't wait. Our Blueprint Black Friday and Sunday at midnight. Once the link closes, it closes. Don't miss out on what could be a once-in-a-lifetime opportunity to become another one of these fantastic results. I hope to welcome you into our community soon. Now, let's get right back into the charts. Now, let's look at freshness. Is this zone fresh? We are looking to the right. So price has never been down here. So it's completely fresh, never been touched, and so on. Now, remember when we covered the theory of originality. So we have to now look to the left. And the very original zone is actually here. This is the origin of this entire area. So let me explain. And also for that, we're going to quickly draw this zone here. You see? So this was here, I would say, an original zone, a nice drop-based rally. Price rallied out, very strong leg out, and came back in. And you see what happened. It moved out, created a new kind of a drop-based rally, came back in once, 2 times, 3 times, 4 times, and then rallied out again. And then it created a new drop-based rally on the way out. And you could argue, well, that price here, well, you see even here, touched that zone once, here the wider version, and then came back in, and price rallied out again out of this whole area and created a new demand zone that is obviously fresh because price has never been down here. But now think about the concept, the overall concept of supply and demand. And I made a video about this as well, which is called Supply and Demand versus Support and Resistance. The fundamental difference between these two strategies. Because supply and demand is telling you what? That you have a newly created zone, so you have unfilled orders in that zone. And the more unfilled orders are getting consumed by a zone, the weaker the zone gets, the weaker the zone becomes. And, at some point, the entire zone is consumed, exhausted, and, the unfilled orders are completely gone, and then the zone will fail. And the concept of support and resistance tells you obviously the opposite. The more times an area has been hit, the stronger the zone gets, basically, right? Which is fundamentally just not right, because every zone contains unfilled orders, and when they are consumed, the zone is exhausted and the zone will fail. Now in this area, for me now is more like a support area, because price has been in this area so many times. So I would expect all the unfilled orders being consumed and the area being exhausted. And the next time price comes down here, that this zone that by itself is fresh, high quality, strong leg out, nice base, looks really good. But if we look at the originality context here, I would expect this zone to fail. And if we look how this is actually right now, it's actually right now playing out as the 25th of November. So you see it's coming down. This one is not even holding, so it's just right away breaking. And you see what will happen today. So today, right now, we're in that zone. But I expect this zone to fail. So there are multiple reasons as well why I expect this zone to fail. Not obviously only because of originality. This is a major reason, structural reason, right? Technical reason, but obviously also fundamentally. Actually, myself and the entire community is short from this area up here because of CUT, seasonality, some fundamental reasons as well why we shorted this. But we could have I could exit this trade here because I could say, hey, there's a strong demand zone. But, because of the originality context, based on my rules, I would say this is going to break and going lower. So this is originality. And now, what zones are original and what zones are non-original? There's also a rule. So we have two demand zones, right? We have a rally-based rally and we have drop-based rallies. And we have two supply zones. We have drop-based drops and we have rally-based drops. So when it comes to U-shapes, inverted U-shapes, so rally-based drops, or as you see here, U-shapes, drop-based rallies, they are never original. So U-shapes are never original, only at all-time highs and all-time lows. Why is that? Think about it. Let's assume this would be all-time high here on the Swiss franc futures. It is not, but let's assume, right? So then there is nothing to the left, right? Then there is nothing to the left. Or if that was all-time low, obviously it's not, but if that was all-time low, there couldn't be nothing to the left. So it is original. So only at 90 or 95% at the time, I would say, only at all-time highs and all-time lows, the U-shapes are original, otherwise they are non-original. And rally-based rallies, so rally-based rallies, like you see here, rally-based rallies, or drop-based drops are always original. So does this mean, right, and I get this question asked so many times, does this mean that original zones are better than non-original zones? And the clear answer is no. No, no, no. All right. We trade both non-original zones and original zones. Non-original zones. And I would suggest as a beginner, you trade regardless. You don't even look at originality. Originality you add later to your set of rules once you have a little bit of experience, a sample size of trades, and you see, hey, a few zones, well, I get stopped out here and there, and the zones didn't hold, although I expected the zones to be strong. Why is that? And then maybe you look at originality, and maybe it was a case like here where the zone was strong, but you see price has been there multiple times. What would I say? What does it mean multiple times? Multiple times, if price has been in a particular area in a shorter period of time, you see like a cluster here, 5, 6 times, then, if it's coming back the 5th, the 6th time, I would expect the area to break. All right, so as a general rule of thumb. Now, if I want to look at flip zones, you see here a very strong rally-based rally. And the flip zone, you see, you had here an opposing zone where you had a rally base drop. And then price came back into that area. And then you see the opposing force, which was demand, overpowered. It was so strong. So the demand zone was so strong that it went through that supply area. And on the way up, it created a new demand zone. And that's why you see these flip zones where flip, because it's created by an opposing zone, not by the same zone. This demand zone is not created by another demand zone, because then it would be a topic of originality. It's created by the opposing force. And it's actually so strong that it went through that opposing force. And that's why, conceptually speaking, it's a stronger zone. And you see here, this demand zone, price came back into that flip zone, right? Because it violated that supply zone. Price came back into that flip zone, and then it worked out beautifully. So generally speaking, flip zones tend to be stronger because they had so much power that they were able to, or the demand force was so powerful that it was able to overpower, to violate this supply area. Now we can look at the same thing here on the euro dollar, for instance, where you see when we first look at flip zones, you had here a supply area, and you see what happened here. You had price coming up and fighting against supply, was basing. You see clearly here the fight, right? You see the fight. How do you see the fight? Because you have basing candles there, right? And this is showing you that there's a fight. And then eventually demand overpowered supply and it went through. But then you see created that flip zone. And by creating that flip zone, it created a very strong demand zone on the way up. And then you see price came back. And very often this area is going to be retested. You see price came back, and this zone, also this rally base rally, worked out beautifully. Now here quickly also, conceptually speaking, when we talk about originality, you would say, some people would say, maybe you have here a strong drop-based rally. And from a structural point of view, yes, it looks okay, right? Just from a structural perspective, without adding any context. But then you would look maybe to the left. You see here, there's a rally-based rally that is not even particularly strong. But then you see price came back into that rally-based rally, created another, you see here, created another demand zone and came back again in here, created another demand zone. So also here, conceptually speaking, and we can follow that trade or that kind of price action, what's going to happen here. I would expect eventually, this zone to fail. Why? I mean, one reason is obviously originality, because price has been in this particular area multiple times. So I would expect all the unfilled orders to be consumed, so the zone to be exhausted. And then obviously, because we are short from the top multiple times, from this area, and then again from this area, because of fundamental reasons, CUT and so on and so forth. So I hope now that originality and flip zones are a bit clearer and make sense, and you can incorporate this into your set of rules. Again, I want to stress the following. In the very beginning, as a beginner, you don't add originality into your rules. You trade everything, whether it's non-original and original. You just look at freshness, but once you get some sample size in, you have some experience, you slowly add originality into your set of rules. And again, I trade everything. I don't make a difference between non-original and originality. I look at the overall context, and if price has been in a certain area for like 4, 5, 6 times, Then I consider originality, and then I only want to have, well, zones that are original and fresh, obviously, and in the right context. So that's it for the practical application session. And that completes today's practical application session. By now, you've seen exactly how originality and flip zones behave in real market conditions, and why they are two of the most powerful qualifiers in step 3 of the supply and demand process. If this helped you, make sure you continue through the full supply and demand series. The playlist will appear right here on your screen in just a moment. Watch the lessons in order, as it's the best way to build a complete professional level understanding. And as for the announcement I made, I want to remind you that this is a never been done before and super limited time offer. When the Black Friday weekend passes, the offer will be over and the link will no longer be accessible. If you've been learning from this series, this is the perfect next step. You'll find the links below. Before you go, please like, comment and subscribe. Once we hit 2,000 likes and 30,000 views, I'll release the next episode where we dive into zone location, profit margin and arrival, which are concepts that will completely change how you filter trades. Thank you for watching. Thank you for supporting the series, and I'll see you in the next lesson.